Good morning, good afternoon, and good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the CEO of Openpayd, Iana Dimitrova. Great to have you with us.
Elliott, it's a pleasure to be here. Thank you very much for having me and Openpayd here today.
Well, thank you for joining us. So look, before we get cracking, we're going to learn a little bit more about Openpayd. Okay, so Iana, tell us about your fintech.
With pleasure. So Openpayd is a digital banking as a service provider. We service corporate customers exclusively. We're regulated across the UK and Europe, and we service customers that expand across the UK, across Europe, and are looking to build a global business as well. What we do is we provide infrastructure for any business that wishes to build their own financial products and services, but also wishes to streamline their cross-border money flows as well. We, as I mentioned, do that across the UK and Europe today, but really our ambition is to build a global business so that we can support the expansion ambitions of our customers and enable them to switch on new countries, new jurisdictions through the flip of a switch, really.
Okay, and where do we stand in terms of revenues, growth, fundraising, valuations and the like?
Sure. Openpayd is one of the few payments companies that is cash flow positive, which is, as I'm sure you're well aware, quite unique in the marketplace. We are now reaching the markets for the very first time to really extend our cap table as we're in the process of becoming a bank here in the UK. So in terms of revenues, we're going to finish the financial year at 22 million of revenues, and we have more than 100% growth year on year.
Okay, some nice specifics for a change from a fintech. What exactly is the mission here? You said about going global, but is there kind of like in a nutshell what you plan to be globally? Is it just a global bank for everyone, for companies?
Really, the ambition is to be a global provider of infrastructure. And when we say infrastructure, that's really the combination of license coverage as well as technology that is agile enough to enable any business to build their financial services, financial products, and turn payments and financial services from a cost to their business to a revenue driver. So really, the ambition is to be able to support our customers, as I mentioned, on a global basis.
Okay, and last year, when you were raising funds, I read that, and you were quoted as saying that some investors have, in your words, a very limited understanding of Openpayd software, but are making offers simply because it's now the space to be in. Is that still the case, or do investors now have a better idea of what you're up to?
I think generally speaking, the space is becoming more and more popular, but we're certainly seeing a shift in even the nature of questions that investors are asking. I believe 12 months ago, 18 months ago, investors were really focusing on the growth metrics exclusively, whereas now we're getting more and more focus on the fundamentals of the business, on the underlying business model and how the business is ultimately going to become profitable. So I'd say that with the development of embedded financial services, we're certainly seeing the shift in perspective and thesis that many investors are taking, and really focusing on the long-term sustainability of a business, not just the top line and the burn rate.
Okay. All right. So we've heard a bit about Openpayd. Now let's get to know Iana a little bit better. So Iana, you're in London, but you're originally from Bulgaria. Tell me about that. How did you wind up in the UK?
Sure, very happy to do that. So, as you mentioned, I'm Bulgarian originally, but I did my studies in France. So you can say that I have moved around Europe quite a lot. I'm a lawyer by background, so I like to joke that I became the chief executive more by accident rather than by design, as I started my career in private practice, first of all, as any junior just qualified lawyer. So I started in private practice, worked in corporate law for a couple of years, and then felt that I was a bit too remote from the business and did not have the ability to influence the decisions that a business is taking. So I made the decision to move from being a lawyer within private practice to moving in-house and being an in-house counsel within a payments firm. So that then transitioned, I guess, into my current role. So you can say that from being the external legal counsel that didn't have much of a steer on a business, I now probably ended up being too close to steering the business decisions. But it's been an interesting transition, as even with Openpayd, when I joined now close to 5 years ago already, I did join as a lawyer originally, as there was no in-house legal team at the time, and the idea was for me to build that foundation, and then I ended up transitioning into a general management role.
Right, because I many founders and CEOs that I speak with, they kind of went into fintech or technology or startups or whatever in order to avoid having to practice law. But you kind of moved into fintech as a lawyer, I think as head of legal affairs at PaySafe, and then, as you say, general counsel at Openpayd. Was it an easy transition? Was it easy to kind of persuade people to help you kind of do that transition? Was it just circumstances happened and then you were there at the right place at the right time?
I think the honest answer is that it was more circumstantial at the time, and as you say, the right time and the right place. And also, given the nature of the business, it was a highly regulated group of companies that all required an awful lot of attention, I guess, from legal and regulatory perspective. It did make sense at the time. But to your question, was it easy to then persuade people that you can actually do the job? And was it easy to galvanize the teams and to really turn the company around? No, that was I'd say an incredibly difficult job, and anyone that is in charge of leading teams, no matter how large or small, would know that ultimately it comes down to people, to building relationships with people, to making sure that there is a common strategy, there is a common vision, and people want to buy into this and really give all their time and effort and passion in developing it together with you. So that's something that they don't teach you at law school, neither do they teach you in business school.
Okay, now aside from this interview, or an interview I saw where you talked about your coffee preferences, I kind of failed to dig up a huge amount on you outside of Openpayd. What do you do when you're not CEOing?
That's an excellent question. In my spare time, I like to spend my time outdoors. I love skiing. I love surfing. I love kite surfing. So when I'm not in London, you would find me most of the time outdoors, either in the mountains or at the beach.
So hiking boots or a wetsuit?
Exactly.
Okay, so look, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with Openpayd CEO Iana Dimitrova. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, Iana, let's now talk about the future of finance. Now, according to a study that you carried out, or that Openpayd carried out, nearly all companies surveyed in Europe, that's something like 96%, said they were planning to offer embedded payments to customers in the next 5 years, or was seriously thinking about doing so. I think the figure for embedded banking was not much smaller at 94%. How does the continent compare with other markets like the US, Asia, or Latin America in terms of embracing embedded finance?
That's really a great question. First, one point of clarification. We didn't really survey all of the companies across Europe, but certainly from the number of companies we surveyed, which was around 200, the majority, the resounding majority, as you pointed out, are looking to launch some form of embedded financial services over the coming years. Now, it's a great question as to how Europe compares to the other continents. I think the one thing to really focus on here is the fact that there's been a lot of legwork done in Europe over the last few years, both in terms of regulatory changes as well as work on the various technical standards to now really enable businesses to even think about embedded financial services. So the one thing that I can certainly say is that Europe as a whole, and I'm referring to both the UK and the EEA here as a whole, are definitely ahead when it comes to other markets, when it comes to building embedded financial services, when it comes to open banking, and when it comes to really openness and interconnectivity of the different platforms, because embedded financial services is all about connecting different systems, connecting an ecosystem so that we can build ever more integrated and smooth journeys for our customers. And I guess the second Payment Services Directive, the latest technical standards around open banking, they all enabled the embedded financial use cases, and I genuinely believe that we are at the very early start of those, and we'll see more and deeper, I guess, interconnectivity and integration in between different platforms.
So if Europe's kind of further ahead in terms of the regulations and in terms of embracing this, where are the best opportunities in terms of geographies and industries? Are the best opportunities where the regulations are kind of most advanced, or are they where, you've kind of got, clear blue ocean?
I think ultimately the best opportunities are where the greatest demand is, and I think we need to probably make a difference between the nature of the demand of end customers across the different geographies. Obviously, the level of development of the system, for example, in Africa, and also financial services as a result in Africa is different than what we're observing here in the UK and in Europe. Nevertheless, I think the opportunity to generate more traction, to generate more touch points with customers is equal across jurisdictions. And this is why more and more businesses across different jurisdictions are looking at financial services as a way of increasing the traction that they have with their existing customer base. So really what we're seeing is that shift of having payments and financial services being simply a cost base for any corporate, for any business, to really becoming at the top of the agenda of the heads of business development, heads of strategy, chief executives as well, just thinking how can they implement some form of financial product or service alongside their core offering to really keep their consumers engaged for longer.
Okay, and as time goes on, I'm just wondering if that makes you and your products stronger, or does it give legacy banks and other fintechs time to build their own capabilities which can potentially match or even exceed those that you're offering?
I think that's really a great question, and I'd answer it by putting myself into the shoes of one of those companies that we surveyed across Europe and the UK in the last year. Because if you think about it, if you are a chief executive that is considering generating revenue or is forecasting to be generating revenue from embedded financial services in 2-3 years from now, you certainly have to think about how you're going to get there. So you have two options of really achieving that goal. One is to apply for the licenses that you require to deliver the service that you want to offer and start building the technology on your own. Now, we all know, and I'm sure our audience here would agree, that this is a very costly and time-consuming exercise. Therefore, the alternative for those chief executives is to look for partners that are agile and flexible enough, that have already built that infrastructure to partner with in order to put together their embedded financial service offering. So our view is that the relevance of our company and the infrastructure that we have built is only going to grow from here. And again, when I speak about infrastructure, I'm referring to both the license coverage that we have built as well as the technological capabilities, because let's not forget, what gives businesses real advantage is how quickly they can build from a technical perspective, a new product or a new service. And going back to your point on traditional banks, would that give them time to catch up? I think traditional banks are certainly looking in that space and are paying a lot of attention to what companies like Openpayd are doing. But do they have the capability to develop the technology in-house as quickly as, for example, we do, or as quickly as our customers require us to do? No, I don't believe so.
Okay, now, much to most people's relief, I imagine, we don't talk as much about Brexit as we used to. You are a global business, or certainly ambitions to be a completely global business based in London. Is it still the best place to start a fintech and to run a fintech? And if so, what does it need to do to stay ahead?
That's also a great question. I believe that the UK is certainly still one of the best places to start a fintech business. The quality of the regulation that we have here in the UK is certainly far ahead of everyone else. And the pragmatic approach that the FCA has been taking now even more recently is certainly very helpful for businesses to develop new products and services and to attract and approach new industry verticals. So one example I can give you is obviously the sandbox that they had launched, and I could only appeal for a more global or more cross-border approach to that sandbox. So if other regulators were participating into that, I think it would certainly be beneficial to global businesses like ours. The second aspect to consider is, of course, talent. London has always been a great hub for talent. Now, one might argue that most recently, in the last 12 months, that has also become a problem because it is becoming increasingly competitive and increasingly difficult for companies to retain and to attract talent. So I think what we will see inevitably is companies looking to build hubs in other jurisdictions as well, but insofar as spearheading the strategic platform thinking, I believe it does remain at the forefront, and it does remain a leader.
Okay, and we talked a bit before about what it was like fundraising in 2021 when fintech was having its best year yet. Have things now flipped? Perhaps investors are telling you, I know you said you were raising funds, perhaps investors are now telling you to ask for less rather than telling you to ask for more?
I think we cannot really avoid acknowledging that the macroeconomic situation has certainly changed over the last few weeks. I think we all saw the direct impact of those changes on the public markets. We certainly saw the valuations going down on public markets, and the same trend we can certainly observe in the private markets as well. I would not necessarily say that investors are asking or suggesting that companies should raise less, whereas clearly last year the steer was you should be asking for more than you need. But as I said, there is clearly now much more focus on the long-term sustainability of a business and the ability of a business to break even and to remain cash flow positive in the long run versus the, I guess, crazy burn chase of the previous 18 months.
Okay, well look, time now for our round of rapid fire questions. Are you ready, Iana?
Sure, fire away.
Okay. Most successful fintechs we know, as you just mentioned, are well funded but losing money hand over fist, a lot of them at least. Is this to be expected or something we should worry about? Just 1 or 2 word answers.
Something we should worry about. This message is very clear, both from regulators as well as investors.
Okay, what fintech segment besides yours has the biggest potential over the next 5 years?
RegTech, definitely.
What is the biggest pain point in your everyday financial life that you'd like to see resolved?
Access to global correspondent banking.
Do you think we're at the beginning, middle, or end of the fintech wave?
In the middle.
Do you have a metaverse strategy?
Something that we're considering.
Do you think that regulations in the EU and US have adapted fast enough to the new possibilities and behaviours we're seeing in the financial industry?
Regulation will always follow innovation, so no.
Okay. How would you describe NFTs? A scam, B, an interesting concept, or C, part of the future that we really don't want to miss out on?
C.
Have you invested in crypto?
Yes, I have.
Are physical point of sales part of the future of finance?
Yes, they would remain.
Okay, and on a scale of 1 to 10, 1 being the lowest, 10 the highest, how would you rate the chances that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank?
10.
CBDCs become a major mainstream reality in the US or EU, and not just in China?
Yes, absolutely.
So that's a 10.
Sorry, we're still on the 1 to 10. I'd say a 7.
You'll be able to open a crypto account at a top-tier bank in parallel or even instead of a classic cash account?
The question is when. I'd say definitely a 10, but not straight away, in time.
That SWIFT will still be the main tool used for transferring money around the world?
Again, when? In time.
Just need a number.
I'd say 5.
Okay, that a new card or non-card based rival will emerge to challenge Visa, Mastercard, Amex and the like?
A 7.
And that we'll see a top-tier bank or insurer bought by a fintech?
Oh, a 10 for sure.
Okay, lovely. Well, we are out of time. So I really just want to thank you, Openpayd, CEO Iana Dimitrova. Thank you so much for joining me today.
It's a pleasure, Elliott. Thank you for having me.
Okay, and for everyone watching, we're going to be back again next week with another big name from the world of finance and technology. We do hope you'll join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. Hope to see you next time. Bye-bye.